Hey everyone, welcome back to Main Street Data. In this video, we're looking at a really cool company called Realty Income, where the ticker symbol is just the letter O. Very interesting symbol. Now in this first graph, what we're looking at is the company's revenue over the last couple decades. So starting in roughly 1994-ish, going all the way up to 2024 today, you can see that revenue has just been exploding, almost a perfect exponential graph where it just keeps on compounding and compounding. As a long-term fundamental investor, we love seeing graphs that look like this. Now, the second graph that we're looking at here is the amount of dividends that the company has been paying out over time. And as we can see, this also has been just growing and growing over time, which again is great to see. Now, when it comes to the dividends, this company is actually really interesting. It's actually known as a REIT, so a real estate investment trust. That means that this company is required to distribute over 90% of its profits as dividends to its investors every single year to continue qualifying as a REIT and get the better tax treatment. Moreover, this company actually pays out a dividend on a monthly basis instead of a quarterly basis or yearly basis. So a lot of people use this company as an investment to use the dividends to pay for their regular day-to-day expenses. It's a really interesting stock to possibly add to a retirement portfolio. One of the reasons for that is that the tax treatment also requires the dividend payments to be taxed at ordinary income instead of capital gains rates. So keeping this stock in a Roth IRA or a 401k could be a really interesting option to folks. Now let's jump over to the dashboard to learn a little bit more about the company itself overall. Now on this dashboard, we can see that this company has a $50 billion market cap, so it is quite large. What this company really does is it buys real estate properties and then rents them out. So they really specialize in buying real estate properties that are designed for things like gyms or pharmacies or large brick and mortar stores, things that are really difficult to disrupt or be put online. As you can imagine, what would an online gym be? Maybe something like a Peloton, but in general, it's hard for Amazon to disrupt something like a gym. So this company really focuses on businesses that are hard to disrupt, that are probably going to be around for a long time because they really want to provide their investors with that consistent cash flow every single month. Now let's go and look at some of the competitive advantages and risks for this company. So the first thing is they actually have a very diversified portfolio of real estate investments. Now, as an individual, it's very difficult to pull that off by yourself, right? Maybe you can stretch a little bit and buy one apartment building or one house that you rent out, and all your eggs are kind of in that one basket. But what's really nice about a REIT like this is that you just make a small investment in this company and they're going to be diversified across thousands of real estate properties. So even if something happens to one of them, you largely are good. Second, this company actually has very, very long-term leases. So these are usually 10 plus years. So even if interest rates go up, go down, property prices go up and down, it's very consistent, stable income that's coming in. On the negative side, some of the risks, one of the important one is competition, right? You really want, when you're investing in a REIT, you really want them to do a great job in terms of picking the right retail locations and renting them out for appropriate rates. So there are other people that are looking to acquire real estate. So is this company getting a good deal on their investments or not? And do they have a history of negotiating good transactions? That's something you might want to dig into in a little bit more detail when thinking about adding this company to your portfolio. Now, if you've never invested in a REIT before, we actually recommend going over to this transcripts tab where you can take a look at the transcript from the latest earnings calls and even some of the historical ones on the right-hand side here. This gives you a really good insight into the company, what they're thinking. They answer questions from analysts, and this is a great way to really understand if this is the right company for you to invest in or not. There's so much detail that can be provided here. And the last thing that we'll say about this stock is if we take a look at a long-term chart, we back in 1994 were starting at a share price of around $7 to $8 per share, and today we're in the mid to high 50s. That, in addition to a dividend yield that is at over 5.5%, can really be a serial compounder over a long period of time. So this is one of those companies that it's not going to do a 10x in the next 2 years. There's nothing really groundbreaking, no scientific achievement that's going on at this company. But as a slow, steady compounder, this can be a great wealth building company or a company, again, that can augment your income to pay for your day-to-day expenses. Anyway, as always, please check us out at mainstreetdata.com. Thank you so much for listening.